Okay, good morning, everybody. Welcome to today's open forum. Today's February 7th, 2024, and we have Tom Weiner, a special guest with us from Waterstone Mortgage. Tom is going to get you updated on what's going on with interest rates, maybe give you some kind of forecast, but also the programs that can help your buyers, help your sellers. So I'm going to go ahead and turn it over to Tom. Tom's been with us many times, and he's awesome. And like I said in the email, very dynamic. So Tom, welcome, and we look forward to hearing what you have to say. You're on mute, though. Told you he's dynamic, guys. You're still on mute, I think. I can't really see. No, you're unmuted. You're good. Okay. We can't hear you. I just muted you again. All right, let's let Tom try to figure out his issues. Anybody have any questions or anything you want to talk about before we get started? Just so you know, Tom was talking to me earlier on here, so I don't know what happened. Yes, Tammy.
Okay, I have a question. So I had a deal. We were under contract. We had the inspection period was ending today. We went to the seller and asked for some repairs and some concession, and they countered back. We never signed anything. So we were at the house on Sunday, and I backed out and left, and they kind of stood outside and they were looking at the trees and blah, blah. And the neighbor told them that there had been a double murder in the house. So they decided they're going to back out. So I sent a release, and the agent called me yesterday and he says, "You're really lucky you have a nice seller." I said, "What are you talking about?" He goes, "Well, because we accepted, you made like an offer and we accepted that." I go, "We didn't have anything in writing." I said, and they were still going to do a termite inspection, but there were so many kind of issues that we wanted to see if, the seller was going to even do what we were asking. So would I have been, if the seller wasn't nice, would that have been a problem? Because we didn't
okay, I'm going to throw the double murder out because that's not relevant.
Right.
So, because you do not have to report a previous murder in the house or any crime that happened in the house, or ghosts. So, what is the real thing? So the real thing here is that they had a request for repairs and that the seller never got back with them.
The seller countered back.
Okay.
And we actually kind of agree, but nothing was yet in writing because I needed to go in and change the addendum and send it for signatures.
How did you agree? Email? Text?
No, just verbally.
Okay. Yeah, it would have been ugly. It would have just been an ugly argument because it's not, the seller coming back to you is what makes a little bit of a difference. But no, it was still being negotiated if you don't have it in writing. So you should have had it in writing by the end of the inspection period.
Which I would have.
They were nice not to hassle you. Oh, you would have, then it was no big deal. But
I would have had it in writing by the end of, I would have never gone on that verbally. I would have put it in writing. We still had a termite inspection to go.
Okay.
Because why spend more money if the seller's not going to agree,
No, you were fine then. No, the seller wasn't. No, agents say stupid stuff like that. You were fine.
But for future, I didn't want to have a agreement and still have time left.
Guys, you can't on the last day, and I see you guys do this all the time and people do it to you. Don't on the last day send a list of repairs you want made and assume that we're in negotiation. That's not real. Say, you need to make these repairs or we intend to cancel. If you don't agree to these repairs, we intend to cancel. So you need to make sure, obviously, do this before the last day. and make sure that your buyer is serious about needing these repairs done, or they're going to cancel, because the seller can just say, no, go ahead and cancel. Fine, we'll consider you canceled, since you said you wanted to on the last day. So you do not have a deal. You cannot come back and say, we want our money back because we sent you a list of repairs to be made. You never answered. They don't have to answer. Guys, you signed an as is contract. When you go back in asking for stuff, you don't deserve a thing. You signed an as is. I mean, you might see that the house is, got problems with it, but you bought it as is. That's what the as is contract is. So they don't have to negotiate anything with you. You just have to walk away, which is fine. You get your money back. That's the beauty of the as is, right? You can't send a list of repairs. Not even one repair that you want. That is renegotiating, but that does not open up your inspection period. It's still ends when it ends. You say, we want this roof repaired, or we're going to cancel. Fine. Then that's fine. If they don't answer, that's fine. You've made it clear that you want to cancel if they don't repair the roof. Okay. You've also made it clear that you're going forward if they do repair the roof. Okay. So at that point, you would send an addendum for the roof, and you would send a release and cancellation and have them sign one or the other.
But so we were going forward until they heard about the murders.
Right.
And so, but we did not have anything signed yet, but we verbally, said that they're okay with that. So
but your inspection period hadn't ended.
No.
Well, that doesn't matter. Okay, that's the beauty of the as is. Also, you hear there's a double murder and you get freaked out, they can still walk away for, like we said, we don't have to get with a standard contract. You would have to get the inspection, all the inspections, and you would have to take them to them. And if it's less than 1.5% or whatever they've agreed to, sometimes they zero those out on the contract. Then they don't have to agree to anything unless it's a general repair. You know what I mean? So then they've got to hire an inspector, and you go back and forth, and it's messy. The as is beautiful for that reason. So somebody asked about the as is versus the standard last week, and it's beautiful for that reason. There's a double murder. There's somebody's freaked out about ghosts or whatever. Some nosy neighbor always comes over and tells a story, whatever happens, right? That is the beauty of the as is. So you were fine, and your people got to use. The great part about an as is they can, if a lot of times there's a death in the family or something happens and they don't want to go forward.
So is this true as well? If we had, which I would have done that, but if we had actually gotten the addendum signed, and you still had a couple of days left in your inspection period, is your inspection period over because you signed an addendum agreeing to these things? The
inspection period's never over until it's over.
Oh, really?
Yeah, I don't care what you agree to.
So even if we signed an agreement, they can still walk away.
And that's the addendum says, and
because he made it sound like, well, you agreed to this, so your inspection period is basically over.
Well, people can make anything sound like anything. It's not true.
Okay.
Your inspection period is your inspection period. You can agree to stuff on the first. You can agree to stuff when you get the first inspection. Look, the roof needs to be repaired, and then you get a termite inspection. Oh, it needs termites, and at some point they could say no, cancel the whole thing. Right. All right. Tom, are you back with us? I don't believe you are. Why can I not hear you? I could hear you earlier. Tom, maybe you're on mute now. Now you're not. Not working either way.
What if he restarts his computer? Sometimes that happens.
Try logging out and log back in, Tom. Not of your whole computer, just out of the, well, you can't.
Hello. Are you talking to Tom Dean?
Hey, Tom. Yes. Tom, can I help you?
I'm just here.
Okay.
He's getting confused because you were talking to Tom.
I was talking to Tom, our guest. Oh, he's back now.
Okay, that's what I thought. Thank you.
Sorry, Tom. Try now, Tom. Weinert. Still nothing. Okay. I don't know why it worked for a few minutes earlier and not now. Tom, maybe we'll see you next week. Maybe. All right. Thanks, Tom. I told you guys he's dynamic. Thanks, Tom. We'll see you next week. I'll talk good about you. All right, guys. Well, we tried with Tom. Sorry about that. So let's get right to whatever kind of questions you guys have. Stuff like that. That's a great question, Tammy. We just had a situation this morning with a Seller had gotten a property through a foreclosure. The person who, I don't know, foreclosee had gone to fight the bank, hired an attorney. This person had certificate of title to sell it. The person who got foreclosed hired an attorney who was working on this the whole time the court case was going on. And they got title of the property back in their name. Meanwhile, we had the buyer who was left holding the bag. They couldn't buy anything because the seller no longer owned the property, and they're fighting over the inspection bill of $750. Tom, I see are you with us again?
I don't think so.
Yes, you are.
Yay. It
Tom,
said in the bottom, my microphone was off because of the number of people participating.
Well,
I don't know why that's true, but I got the headset on now. It seems to be working. So yay.
perfect. You sound great.
I appreciate that very much. I try to. Good morning again, everybody. How are you?
We're awesome.
You guys want to hear about the most exciting thing ever, like interest rates, right? Yes. Who knows where interest rates are compared to last 4 or 5 months ago? Up or down? Me, thumbs up, thumbs down. They are down significantly, actually. I just had a call from a client I pre-approved back in July who had to switch gears for some reason. Actually, their house burned down and they were going to try to buy a house, but they decided not to. So revisited that this month, and their rate is down from 7.625 back in July to 6.9 today. That saves them $240 a month on their $500,000 purchase. So we're going in the right direction. That's a good thing. Where will they go in the future? Well, the Fed has paused rate hikes twice now. They say they're going to drop the Fed rate. Everybody knows that I believe most of you probably know, I've talked about this before. When the Fed changes those rates, it does not directly affect interest rates. It affects your auto loan rates. It affects equity line rates, but it falls down and affects rates eventually. So we're in the right direction. We fully expect that within the next year or two, we will be down in the 5s again, hopefully down in the 4s. Fortunately for us, that means we expect a nice little refi boom. All the people I put in loans over the last couple of years, we're going to be probably refinancing those 7 and 8% interest rates, or we'll get some of our buyers off the fence, which is starting to happen. We saw that at the beginning of the year, where people who were sitting there last year when I told them their rate was going to be 7.75 or 8%. Oh my gosh, it doesn't matter what the payment is, right? You hear that rate, and even though the payment is in line with what they're comfortable with, that's just not what they want to hear. So going in the right direction there. Any questions on interest rates? All right.
Yeah, Tom. So I see different rates for different kinds of loans. Is there anything that's out of the ordinary right now? And Malvis wants to know, what are they today? But is there anything out of the ordinary right now for example, is it a really good time for a 20-year or a really good time for a government loan or anything like that?
Okay, good question. Really, no. For the last year, even now, when we look at rates and we price things out for clients, and let's go back several years to when a 30-year rate was maybe at 4 and a 15-year was at 3, right? There was always a gap of about a full point in rate between a 30 and a 15. That gap closed 4 or 5 years ago and has not changed. I've looked at it a few times, not very often, because there aren't that many people that want to do a 15 unless they're at the age where they're wanting to pay that mortgage off quickly. They're going to retire in 10 to 12 years, so that 15-year gets them pretty close to that number. But no, Ryan, to answer your question, the 30-year is still the best product, outside of when you start looking at some things I'm going to talk to you about, different products, things we call portfolio products that are done through Waterstone Bank or other lenders that aren't Fannie, Freddie, FHA, VA. Okay. Those products will have different rates. They'll have different options like ARMs. So it's a good time to talk about ARMs, actually. Everybody knows what an ARM is? Adjustable rate mortgage, right? Does that scare everybody when you hear ARM? It's like, no, I don't want it to change, right? Well, the reality is most ARMs are fixed for at least 5 years. There used to be a 3-year ARM. Nobody does those anymore. Haven't done them forever. Back when I started in mortgage business in 2004, we were doing a lot of 5 and 7 year ARMs. How long do you think the average person is in their home? Because can they give me numbers? Can you?
5 to 7 years.
First time home buyer, 3 to 5 years. Next home, 5 to 10. Okay. So Viviana, 3 to 5. So for a lot of people, what difference does it make if you have a fixed rate for 5 years or 30 years? You're not going to pay that mortgage off. Has anybody here paid off a 30-year mortgage in 30 years? Some of you are not even old enough to have possibly done it. Okay. Nobody does. Okay. It was the standard back in the 30s, 40s, 50s, probably when houses cost $40,000, but not today. Okay. So that rarely happens. So when is the best time to do an ARM? Was it 2 years ago when rates were going up, or now when rates are going down? Right? Both, really. Because what if you did a 5-year ARM 2 years ago at, let's say, 7.5%? You're 2 years into it. You're another year or two away from moving into your next house. What's your rate going to look like if you don't move? If something changes, you didn't start the family as early as you thought, so you're not moving up to the next house. What's going to happen to your rate? So it started 2 years ago, maybe 3 years from now. Where do you think that rate will be? Lower, right? Much lower, most likely. It may not be, but it probably will be. You have to look at what's likely, and what's likely to happen in the future is just as what happened in the past. If you look at a rate cycle, rate history, go back 40, 50 years, rates go up for a while, they come down for a while, and they go up for a while, they come down for a while, right? It's usually a few years apart. So there's always a point. That's why people can refi. The thing I'm telling most clients today, and I don't know why I wasn't saying this before, a mortgage is a temporary thing. Okay. How many of you have had a mortgage and refied it at least once or twice in a home you've been in for 10 to 12 years? Very, very many of you, most likely. My first house here, probably refied twice in 15 years. I've already refied once into that 15 year to knock it down when rates were really low on the house I've been in for 8 years. So it's very common to do that. So ARMs are back as an option. A lot of the products that are outside the norm are going to be ARMs. They're not going to be a choice. There's not going to be a 30-year fixed option, which gives people a comfort level. There are some people that just are freaked out about adjustable and don't want to do it, but it's a good product to use. I wanted to pull up the last few loans that I've done and what rates have looked like over the last couple of years. So let's go back to the beginning of 2022. The first loans I closed at the beginning of the year were 4, 4.6, 4.5, 5, 4.65. You worked into 2023, 5, 7, 6, 6.375, 7. We got to the end of 23. Everything's in the 7s. I got a couple in the 9s. The last few that I've done in the 7s, but everything I've got now that's pre-approved, low 7s, high 6s. So again, we're going in the right direction with rates. All right. Anything else related to interest rates? Ryan, we wanted to try sharing the screen for slides, or you want to show them however whatever works best.
I'll go ahead and do that.
All right. You show the first one.
Is that the first one?
Bad time to buy rates. Where would I see that?
I'll get it up there.
Yeah, the bad time to buy a home.
Okay, they came in the opposite order. Hold on.
That's right.
Actually,
yeah, the far left.
I got you.
All right. So you guys can see on this chart that currently 83% of Americans think it's a bad time to buy a house. That scared the heck out of you guys being in the real estate business. Not really. It really shouldn't, because look at the bottom, look at the line at under 40%, right? For the last 10, 11 years, almost 40% of the population has thought it was a bad time to buy a house, right? So what do we call those people? Renters. Those people will never buy a home. They don't understand the value of buying a home. They never will. They'll always want to live in an apartment. There's a percentage of our population that's gloom and doom all the time, right? So that's just reality. Now, the fact that 50% more currently think that is a little bit scary. This is what we face every day when we talk to clients. Okay. So if we throw out the 30, 40%, we've got almost half the population of potential clients for us and for you that don't think it's a good time to buy a house. Okay. You want to show the next one, Ryan? All right. So this is consumer confidence in home prices. Okay. The percentage of people who believe home prices will go down in the next 12 months. Okay. Obviously, that number got really low after everything that happened in 06, 07, 08 through 10 and 11. Really low through the teens up into the early 20s. The pandemic changed everybody's opinion, even though values did not drop in that time period, which we're going to see on the next chart. And of course, now we're at the point last year where everybody's saying, it's another crash. Oh my gosh, the sky is falling, right? Well, we're very confident that isn't going to happen. We've learned our lesson. The people that are in charge of that, the Fed, as much as we can talk pros and cons about them, they've learned from the last incident that it is very unlikely that it's going to happen again. All right, last one. All right, is real estate worth the risk? So to combat that second slide, just take a look at this for a minute. Going back all the way to 1942. If you guys could take a look at any 10-year period on this chart and tell me when you would have lost value in your home. The only time that would have happened was if you bought around 2001 to 2, 2003 or 4, and you held on to it for 10 years. Now, you gained a lot before 07 when prices started to drop, but the drop is not as severe as the gain. I always like to use this example with my clients. My wife and I bought our first house here in 1997. If I take the value growth from 1997, 4%, 6%, 8%, 9%, all the way to when the market crashed and they said my house was worth a ridiculous amount of money in 2006 or 7, and then a year later it was not worth that much money. Okay, we bought it for $140,000. In 2006, they said it was worth $400,000. It wasn't. When the values came down, it was worth about $240,000. Okay, so if in 2008 my house was worth $240,000 and I bought my house in 1997, it was worth $140,000. How much did I gain in that 10-year, 11-year period, even with the market crash? So again, the only one that is negative other than the crash was 1990. That was just kind of an anomaly, and it's only 1%. So is it a good idea to buy a home? Yes, absolutely. You guys know that. So as realtors, you can use this information. We use it all the time to make sure people understand that real estate is a good purchase. Okay. Questions on any of that?
Can you share that graph with us?
I forwarded them to Ryan. You guys can have those. Sure.
Thanks.
Tom, I'm going to get back to the question that Malvis had, her follow-up question. What's today's rate on a 30-year conventional or an FHA? Or
can you tell me like 12 things about the potential buyer, like
What's the
credit
average?
score, loan to value, what their income is, how they get their income? It's anywhere from high 6 to low 7. I'll just give you that range, okay? Because again, those are the things that affect. I've got, loans in the pipeline now. They're in that range. Sometimes the range of rates I have is more than 1%. If I'm in the best rate is 6.75, then my highest rate might be close to 8 still, because that might be someone with a 580 credit score doing an FHA loan through a broker. There's all kinds of reasons why rates are different, but that is where we are falling right now, as we've snuck down under 7 in most cases. And again, it depends on the product. I mentioned when I look back at the loans that I've closed over the last couple of years that last year there were a couple in the nines, and I'm going to talk about that and why they're like that and why some of them are still that high. Any other questions?
Yeah, you're going to go through your some of your products and what we can
Yes.
use. Okay,
Yes.
awesome.
I wanted to ask a quick question about your statement about the adjustable rates being a little more prevalent again.
Okay.
Would that have, would people be using like alternate sources like cyber funds or something like that? Or just standard lending practices are just going to lend that way?
So you're asking if those adjustable rate mortgages are as anyone can get them just like a conventional loan? It is a conventional Fannie Mae Freddie Mac product in most cases.
No, I mean, will it be affected by things like cyber currency?
I couldn't tell you, honestly. I don't think so. I don't think that has any bearing on anything to do with mortgage rates, really.
Well, I'm thinking more about the availability of sources of funding being private lending and whatnot.
Well, again, I'm going to go through a lot of the different options I have for loans outside of the norm. So let me maybe explain the structure of Waterstone and other lenders, and maybe that'll kind of help tie that in. There are always multiple ways to buy a house or finance a home, right? Traditional, go to a bank. What does the bank have? They got a 30-year fix. They got a 15. They maybe can do an FHA. They probably can't do VA, and that's what they've got. You go to an online lender and you roll the dice and hope that they know what they're doing, but you're going to have a suite of products. You come to someone like me, I've got direct to Fannie Mae and Freddie Mac. I've got bank products through Waterstone Bank. I've got broker options, and that's where I'm going to go here at the end with all the different outside the box options that we have. So they already exist through lenders like Waterstone. I don't want to say we're a one-stop shop, but literally at this point in time, the only thing I cannot finance is a lot. Okay. They pulled our lot loans in Florida. People in other places in the United States can do lot loans, but we can't. And that's okay, right? I mean, we had it for a while. It's gone. It's no big deal. We can do construction loans. We can do DSCR loans. We can do all these things that I'm going to go over in a few minutes. So, and that's what most people want, is they want to have as much flexibility as possible. I hope that helped, Viviana. Any other questions? All right. Okay, I want to talk about knock, like knock on a door. Anybody know what knock is? Angie's shaking her head. Yeah. Okay. Nodding her head, not shaking her head. That meant Angie knew, so she said yes. We just did some of you may have been on the call yesterday. If you're on my database and my email list, you get that. If you're not, I don't know if I can share my contact info on here, Ryan, or Ryan can send that to you to make sure you guys have it. I can always send you emails when we do at least once a month. We do a Zoom or an in-person for realtors to talk about different products and different things going on in the market like we're talking about today. Knock is one that we did yesterday. It is a bridge loan that meets Fannie Mae guidelines, and it allows someone selling their home to borrow the funds they need for the down payment on the new home, not count the debt on the existing home, and go ahead and make an offer on a home that's technically not dependent on the sale of their home, right? How hard is it for you guys to have your client buy a new home, make offers on homes when it's contingent on the sale of their current home? Is that difficult for you guys sometimes? Right. So we're still in the market where how many offers are your clients on average having to make before they get under contract? 4, 5, 6, 7, depends on the house, the price range and all of that. But we don't have enough inventory still for it to be, I looked at 1 or 2 houses. I made a couple offers. I got one accepted. When you're contingent on the sale of your home, now you're stuck. Okay. It's much more difficult. So what Knock does in essence is they guarantee they'll purchase the home. They're certainly not going to purchase the home from them for as much as you could sell it for your client, but it is an option that helps a lot. Okay. It's been around for a while. I'm surprised we didn't know about it before. I also have other bridge loan options through a couple of different brokers, one of which will do the same thing. They'll actually do the end loan. And it's all done through me, just like any other loan. So there's a couple different ways for you guys who have those clients who need to sell their house first, or at least be able to pull those funds out. Because the biggest dilemma is I have a lot of clients who have funds to put down on another house, but their income can't handle both payments, which typically we have to count. So just want to make sure everybody kind of understood that. And that is the benefit of NOC or other bridge loan products. Questions on that? All right. DSCR loans. I kind of picked out a couple that are kind of hot right now. I closed one recently. It was at 9.25%, but it was an investment property purchase with 30% down, no income needed, no job on the application, no income on the application. The debt service ratio loan strictly uses the proposed rent versus the payment. Okay. So if somebody just doesn't have enough income to buy a property, they've got too much other debt, they can use this product to buy investment properties. I have a DSCR product for first-time home buyers. FICO scores less than 660. And those are the main ones right now. So again, all we do is we order the appraisal with a comparable rent schedule. If the payment's $2,200 a month and that proposed rent comes in at sometimes $2,200 a month, just right at zero. It doesn't. Now, some of them require that you be a little higher. Some of them allow it to actually be a little lower. Okay. So there are a lot of options. I have 3 lenders that do a DSCR loan with no ratio. They don't care what the ratio is. You do have to put more down. Usually it's 35 to 40%. But that's a really great product for investors right now. It's better than a hard money loan. If you guys have ever had to go to a hard money loan, that's kind of, for me, I'm going to show you this list of all of these products I have. I haven't used them all, but I hope I will someday, but we use a lot of them. Hard money is way at the end. That's like the last resort, right? If I can't find one of 15 things that I've got in my arsenal that work, that's your option. You got to go hard money. That's always going to be the last resort. Questions on DSCR?
Yeah, Tom, I have a question. On the DSCR loan, do you require tax returns?
No income, nothing to do with income is shown in the file.
Okay.
Yep.
How much down on those, Tom?
Typically, most of them are 30%. I think one of them, I've got to look that up. I think I've got one that might go a little less. Honestly, the way pricing is today with an investment property, most people have to put 30% down anyway. If I try to price it at the minimum of 20%, it's like I got to charge them 5 points. The banks are still scared that we're going to refi a bunch of loans, which we are in the next year or two. But that's just a little bit going back to rates and why they were where they were, and why we didn't have the ability to give somebody a rate without charging points. I think most of last year, almost every single one of my clients had to pay at least a half a point to a point or more just to get a rate. Because the banks know that if people refi these loans in 2 years, they're not going to make money. It takes 2 or 3 years for a lender who's holding a mortgage to recoup their cost by that client making payments. So if they're of the mindset that, well, gosh, all these people are doing these loans with us, but they're going to pay them off in 2 years and we're going to lose money, what's the point? So they're charging up front. They're charging us the premium of a point or 2 or whatever it is. We have to pass most of that on to the consumer. I have some flexibility, but most of the time we have to pass that on. So, all right.
We got one more hand up.
Daniel.
You're on mute, but
I'm buying a property like that. As long as they come down with the down payment, is good. But they gotta just show that if they're gonna rent it, the rent has to be qualified for it, right?
Yeah, as part of the appraisal, if you guys have done investment property loans before, and you know how your lender works, there always is a comparable rent schedule, unless it's not needed. If I have a client that makes $300,000 a year and their DTI is really low, I don't have to do that. But for an extra $100 and some on the appraisal, we order a comparable rent schedule. So the appraiser tells us value, and they tell you this home should rent for X. As
Mhm.
long as that number in most cases is at or above the payment, we're good.
Oh,
Sometimes
okay.
it's a little bit more. It just depends on where I'm going with it.
Oh,
And
okay.
Tom, I know you mentioned this. What are those rates typically at these days?
The last one I did was 9.25%. That was last summer.
Okay.
Okay.
Yeah.
Oh,
They're
okay.
probably, I'm going to guess they're in the high 8s. The only other loan I did over 8 was a foreign national loan through a broker. It's a very easy process. Client was thrilled. His rate's 8.9, but he was able to buy a property
Do you have a max value on that?
on
DSCRs.
foreign national or DSCR.
DSCRs.
I'm pretty sure it gets probably pretty close to $1 million. We can do it on pretty high price properties.
And duplex, triplex, quadplex.
I believe you can use it up to a 4 unit. I'll have to check that, Ryan, for you, and I can let you know.
Okay. Tammy's got her hand up. She's muted also. We're having a mute problem.
Well, mute thing is hard to figure out on
You're
the
muted,
system, right?
Tammy.
On the 5-year ARM, what's the interest rate on something like that?
Right now, it depends on where I'm going with it, but most of them are at or slightly above normal rates. So they're still not in. And again, most of the time when we're using an ARM now, it's because they can't qualify for a traditional loan. So maybe I'm going to the bank because the bank's a little bit more liberal with their debt to income ratio, or there's some other reason why I can't do a Fannie Mae or Freddie Mac loan. And so that's why that rate will be slightly higher. Actually, I probably have a rate sheet sitting in front of me here if I can look at it.
So that's really the only reason why you would use that 5-year ARM is like more of a qualification situation,
Right. And
not just interest rates.
and it's not, I'm not going to use it for most people that are putting 5, 10, 20% down. Okay. I've got, so now that I pulled up the rate sheet, we're in the low 7s. So again, I can be as low as probably 7.25 on a 5-year ARM. And that is on a 100% financing loan. So real quick, I'm looking at 2 different products that we have through the bank, both 100% loans. Don't have to be a veteran for VA, don't have to live where it's USDA eligible. Anybody can use these products anytime. Credit scores usually got to be around 700 to 720. And the rates again are 7.25, 8% for a 7-year ARM. They're always lower the shorter the term. I've got a 10-year ARM. So we've got a lot of these options where it seems like lately anyway, I'm talking to a lot of clients that don't have a lot of money. How hard is it for you guys to get the seller to pay closing costs today? Kind of getting a little better, you think, right? We're at that point where I'm hoping we're starting to see that turn. We get a normal spring where we see more inventory pop, so we get a good summer. And that is what helps with those seller concessions. So look, if I have a client that only has 4 or 5 grand saved, I can do this 100% loan, but if there's $10,000 in closing costs, I got to figure out a way to bridge that gap. So most of my clients that I'm qualifying now don't have to ask for as much in closing cost credits. Okay. And you guys know the best way to combat that is if the house will appraise, just pay a little more for the house, right? A $300,000 house, they need 5 grand. If you think you got to go in at ask 305 with a $5,000 credit, gets them the same number. It changes the payment by $12 for the client, $13. It's not a big deal. Saves them a lot of money. We have a lot of down payment assistance options. We can use Hometown Heroes, which is probably the best option out there. There is money available. We just have to, all of us have to jump on the computer on Monday morning and see what fell out and see how much money's left. I think there was $1 million left yesterday. So Monday. So we have a lot of those options to help people who don't have a lot of money to put down. It still helps to have something to be able to do that. Ryan, I know we talked about the 2-1 buy down, I think last time. Everybody's kind of probably tired of hearing about that, but if you don't know about it, it's an option for the client to get a lower rate for the first 2 years. It does have to be seller funded. It takes anywhere from 2.1 to 2.3% seller credit to fund that loan. So again, something to think about. I have sent many of you in the past a listing flyer for your listings. If anybody has a listing, you're doing an open house, you want to have something in the house to leave behind so the potential buyer can pick it up and say, I remember looking at this house and, oh, there's 3 payment options for me that tells me exactly what it's going to cost me to buy this house. I can do those for you anytime you want. And the good thing about them is you can put different options on there. If your seller is willing to fund something like a 2-1 buy down or give a seller credit, we can put that on the flyer and put that 2-1 buy down on there. And that tells that buyer, hey, this person might be able to help me out. I don't have a lot of money. Maybe this is the right house for me to make an offer on. All right. All right. Dr.
Tom,
Malone, we'll go ahead, Ryan.
Let's throw a couple things. I got one question in chat from before. Maritza wants to know what the FICO, what's the credit needed for the DSCR? I know you weren't doing income. What are we doing on credit for the DSCR?
I mean, I've got 3 or 4 different options. I think the lowest is just under 700. It might be 680. I'd have to look that up too, but it's not like it has to be a 760. The terms do change. When it's a lower credit score, you will have to show a better ratio or at least a ratio. The no ratio loans are going to be less. I have one that goes down to 660. I'm sorry. I have that note right here. 660.
Okay.
Yeah.
Thank you. And Vivian has a hand up.
Is there a product where somebody who might have a probate property that they need to fix up to sell could qualify for one of those?
So they have a property in probate they want to sell?
Yeah, it's not their property and they don't want to invest their own money. They want to use other people's money to fix it.
Well, nothing can happen on a house that's in probate until that clears. So I've had many situations in the past where people are buying a home that's going through probate. I've had to wait 6 months on one. But if you're talking about a home that is a house somebody wants to list for sale, they can list it and they can get a contract, but they just have to inform the buyer, hey, we're in probate.
No. That's not the problem. The problem is the house, in order to have maximum return of value on the sale, needs work to be done. So
Okay.
Can that person borrow against the house? There's no probate issue. It's not a problem. It's just, is there a vehicle for them to use almost like a HELOC without being a HELOC?
I'm a little confused by what you're asking, honestly, Viviana, whether I'm not sure which property we're trying to talk about.
Somebody inherits a property.
Okay.
In order to fix it up, to sell it, they need to borrow money.
And it's still in probate?
No.
Okay. Then yes, there are multiple options. They can take out an equity line. We have an online option called Aven. That's like a credit card that I've referred some clients to. They simply qualify people based on the equity in their home. It's a credit card that acts like a HELOC. Yes, you can borrow against the home. When you were mentioning probate, that's the only thing I want to say is you cannot do anything if it's in probate until that has been cleared up.
Absolutely. Yes, sir.
Okay.
Do you
Vivian,
have that same option for a seller? I mean, an owner, a foreign national that wants to pull some cash out of his property, without jump through a lot of hoops?
Probably not on a foreign national. I'll double check, but I doubt that that's an option.
Okay.
Although, all right, I'm going to make a check mark by that. I'll let you know.
Without refinancing, just like,
Yeah.
yeah.
I don't think there is most banks are not going to do that. The products that I use for foreign nationals are all brokered options. And those are lenders who specifically are just willing to take on that type of debt. Obviously at the time, an 8.5 to 9% interest rate. They're probably lower now by half a point.
to go back to Vivian's, Tom actually did this for a friend of mine, pulled $100,000 out of his house. So, Tom, you remember that?
Yeah, I think that was a straight up cash out refi, if I'm not mistaken.
Yeah. Mike, you have a hand up.
Yes, thanks. Tom, are you working with any people that come in that have gone through bankruptcy? Say Chapter 7, probably most common. If you do, and how do you handle those?
So there are waiting periods for every type of loan product, which some of you are probably familiar with. And it depends on whether it's a bankruptcy and a foreclosure or just a bankruptcy and what type of bankruptcy and what type of loan I'm trying to do. There's a chart that has about 3 or 4 or 5 different options, but mostly with a foreclosure, that's the hardest one because Fannie Mae is 7 years. But I have, it should be on this list, not on this list, but I have lenders who will do loans in shorter time periods. So let's say it's a normal 7-year period. It was just a foreclosure and they've got to wait 7 years to do a traditional loan. I've got some products through brokers or the bank that will shorten that wait period to 3. There's going to be a wait period regardless of what happens, but the wait period can be shortened. If it's a bankruptcy and a foreclosure, which is the most common, right? You file bankruptcy because you can't make your payments. The bank's going to foreclose on your house. Okay. How long did the bankruptcy and the foreclosure usually happen at the same time? Does anybody know that? You'd think they would. You'd think the bank would want to take their house back as fast as possible, right?
So,
Nope. I've seen bankruptcies occur. Bankruptcy takes 90 days. I've seen people file a bankruptcy and let's say the bankruptcy is discharged last summer, July of 2023. Okay. I guarantee you if that happened in July of 23, that house is still not foreclosed. Banks will take years. I've seen people have a bankruptcy and the foreclosure happen 4, 5, 6 years later. Okay. It's ludicrous to think that a bank would do that, but that's what they do. So the good thing is in 2015, they changed the guidelines. So imagine if you had to wait 4 years for a bankruptcy and 7 years for a foreclosure. Okay. And in my scenario in July, the bankruptcy was discharged. Okay. Let's say 3 years from now, they foreclose. When's the first time you can buy a house?
10 years.
7 years later. Take you 10 years, right? But in 2015, they got smart. They changed the rule. And now in the new scenario, bankruptcy discharged last summer, house forecloses. Let's say the foreclosure happens in summer of 2007. You're eligible to buy a new house the next day. Okay. Because it was included in the bankruptcy, if that one property was included in that bankruptcy, you only have to wait the bankruptcy wait period, not the additional tacked on the back end. And then again, Mike, there are options to shorten those time periods. The minimum is a year for anything, no matter what. And again, if they're going to do an FHA loan or another type of government loan, the wait periods are a little shorter, but the minimum is a year. And the average is probably 2, depending on the event and what happened.
thank you.
You're welcome.
Tom, I've had, I want to bring this up for everybody. Well, I'll tell you why first. I've had no less than 5 agents contact me with questions, and these are just the ones who had questions about a client they had who contacted them because they were being foreclosed. And foreclosure, they've been notified of foreclosure and they realized they probably have equity in their property.
Yep.
And so they wisely consulted a realtor. And so I just had some questions about some basic stuff. And some of them were going to be pretty tight by the time they pay all the closing costs. And God only knows what the attorney is charging the bank that they're going to throw on them too. So those are always moving numbers and stuff. But what is the difference? Obviously, and all of those people would be able to, one of them was really going to be tight, but the rest of them get out with money in their hands, right? So what does, but I want to ask you this because it's certainly coming at some point. What's the difference between a short sale and a foreclosure for a client's credit going forward? Obviously, if they sell out and they break even or make a few bucks, there's nothing. Who cares? They just sold their house. They're going to have a foreclosure filed against them.
I'll grab a
I
document.
want to talk a little bit about the filed foreclosure and how that affects them, and the short sale, how that affects them.
Okay. So depending on where they are in the process, the short sale may be passed and not available. Okay. It depends on how far along they are. Some banks are going to work with that person. Some are just going to say, no, they're going to, so let's go through the process. Okay. You realize foreclosure is coming. You're not making your payments. You're upside down. You got to get out of it, whatever you're going to do. Okay. So If you go to pursue a short sale and you go to the bank and say, I want to pursue a short sale, they have to approve that. Okay. Some people probably don't know that. So if the bank says, sure, go ahead, list your home. And I've seen this happen. The seller gets an offer. They send it to the bank because the bank has to approve it. The bank counters, the potential buyer counters, and the bank says, oh, never mind, we're going to foreclose. So that all depends on where you are in the process. So if someone's going to consider that first thing, do it fast. Okay. Make sure you get on board with the bank. The wait periods are shorter in most cases. Just on a conventional loan, a short sale and a deed in lieu is 4 years. A foreclosure is 7. Okay. So obviously it's a shorter wait period before you can do a loan. In any regard, it kind of doesn't matter, Ryan. I don't want to say it doesn't matter what happens to your credit, but at that point in your life, it really doesn't matter what happens to your credit because you're going to have to wait 2, 4, 7 years, depending on what we're trying to do to recover. And I can help them build that credit back up and tell them the right way to do that. Does that help?
Yeah, I think so. So yeah, that's what I was getting at was the wait period for the short sale.
Yep.
And I wanted to let all the agents know that there's a lot of this happening out there now, which is people have life issues and they're not making their payments and they are getting foreclosure notices. Tom, one question I had for you, I'm sure you've had a lot of people come to you and say, hey, I got noticed for a foreclosure before, but it never went through. I sold the house before. For these people who are selling the house before, is the filing of the foreclosure or is it the actual closing of the foreclosure that is what triggers these waiting periods and destroys their credit?
Yeah, I mean, it's really timing. I mean, if they can beat the foreclosure and the house sells and it doesn't actually foreclose, then you just have to worry about if it's a short sale, you just have to worry about a short sale. I mean, some of these properties are not short sales; they're just sales.
Right. That's what
Right?
I'm talking about. Is just sales because we have a lot of people, with a lot of equity that went through the pandemic and all that stuff, and they have equity, and so they're selling now. They've had this big boom in prices, but now they can't make their payments, so they're selling. They got a little bit of equity. So I'm talking about those people that do break out of it fine. They make 20 grand, put 20 grand in their pocket. They broke out of it fine. What did it, aside from, all the 30 days late and 60 days late, 90 days late that the mortgage company is going to put on their credit, but the actual foreclosure, just because they filed it in the court, if it doesn't actually foreclose, they're fine, right? As far as
correct. Sometimes we see those and it looks like they foreclosed. So we have to dig in and figure out what really happened and did it really go through foreclosure or not. And as long as we can clear that up, then we're good. And like you said, the biggest hit is actually the lates on your mortgage, because if I pull a credit report that's got 5 lates in a row, it's going to be over a year before I can do anything for that client, regardless of what happens down the road. It doesn't matter.
Okay, so we're talking. Yeah. So there is.
Are you guys? So you guys are actually seeing that, because I'm surprised we didn't see it sooner. To be honest with you,
me too.
We were talking about it at the beginning of last year that hey, we're going to get more inventory because people are going to sell their houses before they get foreclosed on, and that didn't happen.
No, I've been talking about it for years too, and it's finally happening.
I know.
Sadly, but
well, hey, look,
at least most of them have equity. We're not seeing.
Well, that's the thing. It's not like it was back when the market crashed, because we've seen value increase, not decrease. Right. So it's a different environment.
Yeah, these are personal. These are off, outside the norm, personal situations that are making them not pay their mortgage.
Yep.
Okay, go on, Tom. Sorry, I think that's all the questions.
Oh, no problem. So last thing is, I just wanted to go through just briefly, and if there's one of these products that kind of strikes you, you can certainly let me know. But these are all of the outside the norm options that I have available, either through the bank or a broker. Bank statement loans up to 90% loan to value. We already talked about bridge loans. Cannabis income, when the borrower is the owner operator of the business. One lender I can do it. Nobody else has done it. I've had this happen a couple times. Couldn't do it. Now that we have this broker, you can work at a cannabis store and you can do any kind of loan you want. But if you own it, you got one option. We talked about DSCR. FHA down to 550 credit score. I don't really want to work with borrowers with a 550 credit score, but if you send me one, I will. Okay. We've been able to go down to 580 for a while now, and we just have one lender that's starting to go a little bit lower. We used to be able to go to 500. I actually did a VA loan for somebody with a 530 credit score. He needed a co-borrower, and his mother signed up, and she had a 520 credit score. So the two of them together were actually able to do a loan. And so we can do that again. You know, look, there's a lot of other things that come with a 550 credit score, but if they're eligible, at least there are options now. I mean, I'd like there to be loans for anybody that can actually make the payment, but you know, this scares people sometimes, but there is a bigger down payment requirement. It's usually 10% instead of the normal 3.5. Mentioned 4 national borrowers. We've got renovation programs for government loans, VA, USDA, fix and flip programs. I have a construction loan product. We have had one through the bank for many years, and I'm actually doing 2 of them this month. Just traditional, conventional, one-time closed construction loan product. You guys probably don't like those because you only get paid on the lot if they buy the lot with you, but they're out there for clients if that's what they want to do. Some of these lots are pretty expensive. You guys could actually make some money selling those. We now have a lender who will do a construction loan up to $2 million. In the past, we've usually been capped at the conforming loan limit around $700,000. Manufactured home, I do 4, 5, 6 a year. They're not as complicated as people think they are, so don't be scared of manufactured homes. And that's really about it for now. Doctor loan, did I mention the doctor loan? We have a doctor loan that goes up to $2 million as well. 100% financing, probably not quite to $2 million, but at least up to $1 million for physicians of any kind.
What's the interest rate on those?
Not as good as market, but probably high 7s to 8s. Some of them are adjustable, but there is a 30-year fixed option. Again, that's going to be the first loan that person does, and they're going to buy another house, you know, with you down the road anyway.
Right. What is your fix and flip loan kind of like? What is that?
I'm going to have to look that up because I don't know the terms of it. I really haven't had to do that yet. It's an investment, so I'm sure it's got to be you know, you got to have at least 30%, 40% equity in it.
Like a hard money.
Yeah. Most of those products, when you get outside the standard, it's not, you know, on the purchase 5% down, or, you know, you can max your loan to value at 80, 90%. Most of them are a lot lower.
Tom, the DSCR, does it have a early payment penalty?
The last one I did not. I think some of them do though. It's not very common anymore. There usually aren't as many prepayment penalties.
Yeah, it just seems like nobody would do the hard money if they, you know, the fix and flip, if they could do that, and they would use it to fix and flip.
Yeah, I mean, the last one I did, the client fully intends to refi it later. She just had what I would consider bad advice from her tax accountant on her tax returns, and it dropped her income dramatically from one year to the next. And that's a good point to make for you guys, especially if you're going to buy homes. Many of you, I'm sure, own homes. Be cautious about how much you write off. You have the ability through our government and the tax system to write off your expenses, but be cautious of that, because the more you write off, the less you can show an income. I have a realtor I've worked with for almost the whole 20 years I've been in this business. He does very well and shows no money on it, nothing earned on his tax return. It is, and I told him a long time ago and said, I'm never going to be able to do a loan for you. Well, now I can, because I have other options where I don't need that. But a traditional loan, you'll just never be able to do it. I always have. In fact, last month I spent a lot of time revisiting clients from last year. If I talked to somebody in July, August, September, anytime last year, and they had declining income, or they had just started a business 2 or 3 years ago and they're not showing a lot of income, they're taking advantage of the tax code, which is all legal, and writing things off. But, you know, if you make $100,000 a year selling real estate and write off 80, you're not going to qualify for anything. So a lot of times I have a file back here behind me with 8, 10 clients in it that I called first week of January and say, okay, remember, we need to jump on your tax returns quickly. you need to send me a draft, and you need to show a lot more income and bite the bullet on taxes this year in order to qualify to buy a house.
Fantastic. Any other questions for Tom? All right. Tom, I told you guys Tom was dynamic, the most dynamic lender I know. Tom, thank you very much for coming in. It's been very, especially, I mean, for me, even, it's been very, very educational. I really appreciate you guys coming in, or you coming in, and the
Thank
rest
you,
of you guys for coming in and asking questions. Lots of questions we had, and I appreciate it, Tom. That's a lot of exciting stuff going on. Tom's information is in the chat. And please contact Tom. He's got a lot of things like your, I love the open house thing. Those are great things to add to your open house to let people know what they can actually do to buy the property. And awesome. Thank you very much, Tom.
If you need one of those, just email me the link to the listing. Make sure I have a good headshot from you. I search for realtors online all the time, and it's amazing to me how many do not have good photos out there I can pull. So do that. And if anybody wants to ask me more questions or meet, and I'll happily buy you a cup of coffee someday, just let me know.
Awesome. All right. Well, thank you, Tom. Thank you very much for coming in.
All right, guys. Have a great day.
Lisa has a question.
Okay, Lisa.
Oops, I hit the wrong button, but hi, Tom. I'm going to call you. I
So
have one of those clients who might have like that 500 score, and he's moving and his house is pending. So
Okay.
if you're not busy right now.
Yeah, cool.
Thank you very
Call
much.
me anytime, Lisa. Thanks.
Tom, all you have to say is those are loans you don't want, and then you'll get them, buddy.
That's fine. I'll take them.
You put it out there. All right.
No loan's a bad loan. If I can close it, that's good.
Yeah, there you go.
Okay, bye-bye.
Awesome.
Thank you.
Awesome. Thank you very much, Tom. See
Bye,
you
guys.
soon. Bye-bye. All right, guys. Any other questions for us? That was actually great. I was just kidding about him being dynamic, but he was actually great. He is, just for full disclosure, he's my brother-in-law. And so I've known him many, many years, even before he got in mortgages 20 years ago now. Seems like yesterday. We're all getting up there. Any other questions or comments? So just for you, those of you who are new here, you do not have to use any particular lender. Use whomever you want. You're not financially or in any other way affiliated, except for me having a brother-in-law, which I can't control. He's married my sister. But he's a great guy. But use whomever you want. We have other lenders in all the time. We're having one on the 28th come in as well with a bunch of other different stuff. So use the ones you want, but his information is in the chat. He's done a great job for us. Angie.
Thanks. I just wanted to let everyone know that I have an open house opportunity in Sanford. We have a townhome listing there. It's really nice. We just had a price reduction on it. It's ready to go. Has 3 bedrooms, 3 baths, and a downstairs den office type or 4th bedroom place. Kayla did an open house for me last weekend. She did it there. She got a really great buyer lead. We had a buyer consultation with him over Zoom. He signed our buyer's agreement, and she's showing him other listings too. So it's a good opportunity to get some buyer leads if you don't have any that you're working with right now. Got to do some open houses. So send me a text or a call and let me know what time you want to host. It's vacant, so it's ready to host anytime, right in Sanford, convenient location. All right, Mike, thanks.
Guys, I'm putting Michelle's information in here. This is our marketing coordinator, Michelle Machado. Putting it in the chat. Contact her for, if you are not in our Facebook group, if you are do not have our YouTube channel, contact Michelle and ask her for those things. It was those of you who recently joined, it's all updated in your welcome email from me. But contact her for any kind of information that you need for stuff like that. But our new YouTube channel, she has a link to that. It is updated in your welcome email for those of you just joined. Good. Lots of people want to work open houses. That was my point. So when you have something like Angie, she may or may not, now she doesn't have to put it in the Facebook group, but you can put them in our Facebook group. Check that, guys. You'll want to check that if you want to work open houses, or if you have an open house that other people can work, just put it in there. Anything you have, new listings, whatever that you want us to know about, you can, according to MLS rules, you can put it in a day early. You can share it with us the day before you put it on MLS, the business day before you put it on MLS. So
Michelle's doing a great job with the YouTube page. I noticed all the intros and outros she has on them, and she's edited the videos. They look really great. I saw my when I did the presentation on open houses, I saw it's on there and she edited it. She spelled my name wrong, but the rest of the stuff looks great.
well, she's on here now, and hopefully you got the whole point of that was that you spelled her name wrong. So
yeah, but it's looking really good. The content's looking good. It's not just raw footage. She's editing it, and it's looking really great. And there's like 57 views of my open house video, so that's good. I'm excited about that, and that you guys are putting it out there for us.
Yep, she does a great job. You guys might see on our Facebook group, she advertises all of these. She does all kinds of stuff for us. So we really appreciate that. Follow us on Instagram. Michelle can share that with you. I think it's Join FRI on Instagram, where we have a Florida Realty Investments Facebook page, and we obviously have our own group. So we got all kinds of stuff going on, and Michelle does a great job with all that. And Michelle can help you guys with your little marketing stuff, whatever you need. If you need, some of you guys don't know how to use Canva, or you don't know whatever, you need an open house flyer design, let Michelle know. That's a free resource for you. If you want to have other stuff done above and beyond, Michelle will help you on her free time, and that's above and beyond, and you guys can work out whatever kind of rate you want to pay her for that stuff. But for your basic open house stuff and stuff like that, she's happy to help you guys with flyer designs and stuff like that. She's fantastic. All right. That's just a resource that we provide for you at FRI, and you pay for that with your 0 monthly fee. But you do pay for it with your transaction fees, your clients do, so we appreciate that. Any other questions or comments? Awesome. Hopefully you guys got a lot out of Tom today. I did. I don't always, I have these people come in and I've talked to them before and I know what they're doing and stuff, but I got a lot out of that today. So hopefully you did too. And I hope you guys have a great day and a great week, and we'll see you next week. Take care, everybody. Oh, next week will be Valentine's Day. Don't feel like you have to do anything special for me. Just take care of your loved ones. And we'll see you next week. Bye, guys.